How much can you gift to your kids without having to pay federal taxes? And if there are taxes due, who pays them? You or your kids? Today I want to shine a light on the new federal gifting and estate tax laws. A recent law, the so-called One Big Beautiful Bill Act, has made some important changes that you need to know about. Let's talk about what this means for your financial strategy. First, let's cover the fundamentals. The most important thing to remember is that the tax responsibility falls on the person giving the gift, not the person receiving the gift. Fortunately, there are two key allowances that make most gifts tax-free. The first allowance is the annual exclusion. Some people think of this as a freebie. It allows you to give up to $19,000 to as many people as you want every year without any tax implications or paperwork. The second is your lifetime exemption. This is your personal big bucket of money that you can gift throughout your lifetime or leave to your heirs without paying any tax. You only pay tax if you exceed your lifetime exemption. While this $13.99 million lifetime exemption was set to sunset or expire in 2025 and revert to a lower number from previous years, the big news is that the Big Beautiful Bill Act has made this higher number permanent, and it'll get still bigger due to inflation in future years. This gives you long-term certainty that wasn't there before. For 2025, the lifetime exemption is $13.99 million per individual. But starting in 2026, this number will be raised permanently to $15 million per individual, and it will be indexed for inflation. This is a big increase that you can factor into your long-term plan. You only have to file IRS Form 709 if a gift to one person in a single year exceeds that $19,000 annual exclusion. Most people never have to file this form. And here's an important point. Filing Form 709 does not mean you owe any taxes. Think of it as a scorecard that simply keeps track of how much of your lifetime big bucket exclusion that you've used. With the passing of these new laws, it's a great time to reconsider your long-term strategy. First, leverage both limits. Use your annual exclusion every year and consider using your lifetime exemption for larger gifts. Second, gift assets that are likely to grow in value, like stocks or real estate. That removes their future appreciation from your taxable estate. Third, for more advanced goals like asset protection or providing for future generations, consider a trust. While they're not needed by everybody, they can be a very powerful tool for the right job. Also, be sure to check your local laws. State estate taxes and inheritance tax laws can be different from the federal tax laws we've talked about in this video. These new gifting laws create a powerful opportunity to secure your legacy. It's a great time to review your strategy. Reach out if we can help. For more on investing and retirement planning, watch these videos next.